Right now, I'm finna show you how we work the charts, how we figure out when to buy, when to sell, how we determine our target price, how we determine our stop loss, and how we just determine basically this how you create your play and how you determine your profit, what you gonna make, and all that kind of stuff. All right, so first, which we got in the Discord on the channel. If you go to strategies and techniques, if you go to the Discord, it tell you in there stockcharts.com. So that's one of the ones that I use primarily when it comes to researching my stocks, researching like my plays and trying to figure out like the graphs and looking at the chart analysis. I usually use stockcharts.com. You can use the graphs on the actual TD Ameritrade app, but of course, like stock charts is designed for charts. You get what I'm saying? So it's like more of its expertise. So I usually use them and rely on them for like my best information. So like let's say for instance, let's see what's one of the plays we doing. I'm gonna show you. ARKG. I'm gonna show you ARKG first, which is one of my long-term positions. Let's see. All right, so you go right here. All right, let's see. All right. So this is the thing. When you first get on here, typically I go down here where it says overlays. Simple moving average is basically just explains what it did over the course of 20 days, 200 days. It's basically an average of what the stock, how the stock performed. So let's say it's like getting the average of if I perform a 10 out of 10 for 10 times, or if I do. Basically, it's just trying to get you the mean of what the price is at over the past course of 20 days to whatever amount of days you said that. So for me, I usually do uh I leave it on simple average and I do exponential. Okay. So then I'll come up here and I'll see, where my stuff is, and then I'll go update. Alright, so now it got my MA20 and then it got my MA50 up there. So now it's like I'll look at the chart, I'll come and I'll see they had a pretty consistent growth, over the past year. You can look and tell that they've been from $60 all the way up to pretty much 115. That was a max. And so, and also another thing you can do is look at the RSI. You see every time they go over 70, they drop, go over 70, drop, go, and then they drop. So the thing is, you want to kind of look at the fact that right here, the resistance line, which I've been saying in the Discord in the group, I had my original resistance line at $90 because from what I can see in the course of their growth, right here was the first time that they were kind of consistent and bouncing back off of that 90. So as far as the stop loss, when I bought in at 107. So I bought in probably about right here. So, which obviously, because it's a prediction based off the chart analysis, I bought in too early. So I bought in 107. It dropped 78, which was its bottom, and then it bounced back up off that 80. So right now I have a new resistance of 80. You get what I'm saying? That old $90 resistance line, it's clearly gone because it went below 78 right here. So now I just come up with a new resistance, which is the bottom, wherever it bounces off of. So right here, we see it kept bouncing off the 90. So then right here is bounced off this 80. So that's my new resistance line. So if I was to jump in this trade today at $93.20, my new resistance line would be 80. So that means I wouldn't sell unless it hit 80, 85. So right now it's at $93.20. So it's coming back up it's past that 90, and now it's headed towards its 20-day moving average at $94.90, which is what we set up when we were down here. So now, if I was going to jump in this trade and I didn't have a position, personally, how I typically trade, if the price is at 93.20, I'll wait until it crosses the EMA, which is 94.90. However, you can jump the gun depending on your risk factor, depending on how much free cash you got, whatever your financial situation is, and you can jump the gun and go ahead and get in with ARKG at 93.20, even though it hadn't meet the 20-day moving average of $94. Is it risky? Yeah. But at the same time, you're looking at the fact that you're getting it still significantly cheaper than what it's previously trading at the 100 mark. So getting in right now, you still have time to accumulate all that gain in profits. So for me, my target could be 115, because I bought in at 107, and my target would be 115 because that's the high that was trading at. But for me, since I'm keeping this as a long-term investment, I'm going to wait and let it hit 125. Now, you can also see right now the RSI is 45. Typically for a trader, or for me rather, I'm not going to buy a stock unless the RSI between 40 and 50, because you want to get it while other investors are investing in it, because you know it's going to have a positive uptrend. If the RSI is below 30, 20, all that kind of stuff, then typically that means it's a high sell off because RSI is dropping. If it's above 70, that means it's hot and it's about to bust, which means it's about to be a sell off. So like we looked at earlier, as it rises above that 70 RSI, it always drops down. Rises up and then drops down. So you typically want to be the buyer when it's right here at the lowest point. Right here, right here, right here. Most investors, if they're new to this, they think the best time to buy is when it's up here doing good. You don't want to buy a stock when it's performing well. You want to be gaining profit when it's performing well. You always want to buy your stocks when the RSI is low. You know what I'm saying? Because that's how you're gonna eat when it comes up. That's how you make your profit. So anybody who got this stock right here in the $80, $78 range, that was smart, because that's probably going to be its most recent bottom, and that means they're going to have at least a $20 to $30 profit per share gain increase. So that's how you determine based off the charts when to buy, as far as looking at your RSI, looking at your 20-day moving average. We created a stop loss, which is going to be our new resistance line at the 85 range. We created our target price by looking at the previous high, which is the 115 range. So it's like when you're trading these stocks, when I was down 10K, I knew I wasn't willing to trade, because just because I bought in at 107 that had dropped, I was looking daily to create a resistance line. Once it bounced off that 80, I knew I was good. If it continued to drop past 70, I could have sold, but me personally, I couldn't afford to lose when I was down $10,000. So if you have your chart analysis, then you know what the stock is going to do, or you can predict what the stock is going to do, which is why it's best to do chart analysis whenever you're trading or investing in any stock, so that you can have the best opportunity to make profit and cut your losses. All right, so basically, that was how you pretty much do your chart analysis. That's how you create your stop loss, create your target price, uh, observe the RSI. So a few takeaways, you could take away from this. If you wanted to write down, let's see, if you wanted to have a few takeaways from this. First and foremost, stop loss. Having some technical difficulties. Our stop loss, we have a target price. Oh shit, hold on. We're having some technical difficulties. Alright, so we got a stop loss. We have target price. We have RSI. And you have 20-day moving average. So takeaways from this video whenever you purchasing a stock, you want to have these 4 things down. If you don't know the answer to these 4 things, you shouldn't be trading. You shouldn't be trading this stock, because if you're jumping into a trade or an investment and you don't have your prediction set, or you don't have any, you know, acquisitions to protect your risk management, then you're more than likely not going to be successful. You're just going off the dummy's luck. And so we don't want to go off luck. We want to go off strategy. We want to go off predictions based off chart analysis. We want to have a reason why we're trading. Because if you don't, again, you don't know when to sell or when to buy. You're just in it, and you're not going to win that way. That's how you lose money extremely fast. So basically, key takeaways: you want to have a stop loss, you want to have a target price, you want to observe the RSI so you can know if it's a hot or cold buy or sell, and you want to determine the 20-day moving average. If you do these things, you will have more successful trades, more successful swing trades, better investments, because the whole game is, it's not what you buy, it's when you buy. Tesla, Apple, Microsoft, Visa, Netflix, Amazon, all booming, you know, shooting star type of stocks. The thing is, for me, I've made more money off of cheaper stocks than I have more expensive stocks, because it's not about what you buy, it's when you buy. For cheaper stocks like ET, I bought ET when it was $6, or originally I bought it when it was $5. It went to $7, and I made like 20% profit. And it's just like, you may not make 20% profit off of Tesla or Apple, but you can definitely make 20% off of cheaper stock if you buy when it's low. So the main thing is, if I'm able to come over here to my cheat sheet on stock charts and look at the graph and determine exactly when the best time to buy, then I'll only be making money in these stocks. It's a lot of stocks in my portfolio that I only have increased my gains. I haven't taken any losses because I bought at the right time. It's other stocks like Apple. I bought Apple originally when it did its stock split, but I've been down in Apple ever since August of last year, because Apple is not performing well as far as their chart analysis. But it's like there's other stocks like our penny stocks, and just all those penny stocks and those cheap stocks we've been trading that we've been making money off of, and that's how you know that's the game. It's you can't fall in love with the stock, you fall in love with the numbers. So basically, again, just to recap, this is your bread and butter right here. This is the key to making money in the stock market.